Gold and real estate have been reliable investments throughout history. It's still a dream for most people to own a piece of real estate, as landlords used to be society's elite. Even today, the cost of owning a home seems unattainable. Over time, the financial system has developed to such an extent that it offers an alternative way to grow wealth. Hello and welcome back to our channel. Warren Buffett is living proof that investing smartly in the stock market over the long run can be pretty rewarding. Find out which investment is a better one between stocks and real estate in this video. So hit that subscribe button and the bell beside it, and let's get started. This is a hotly debated topic. Stock market experts claim that real estate is the best investment ever, while real estate investors claim the opposite. They're both right, and the truth lies somewhere in between. So to find out which of them is right for us, we need to look into each one in depth. To begin with, real estate is expensive wherever you live. It's not uncommon for people to work their entire lives to own one property, as it probably was for your parents. You need a lot of savings to invest in real estate. In contrast, it is possible to invest on the stock market for as low as $5. In most cases, you can become an investor in one of the largest companies in the world with just a few $100s. Even great companies like Apple are trading around $300 per share. However, the cost doesn't stop there. With apps like Robinhood, you can now buy stocks for free instead of paying a broker. On the other hand, real estate transactions are pretty expensive, but that does not mean stocks are better. There are much more risks associated with the stock market. It can be challenging to analyze the market and individual stocks in particular. During a market expansion, the entire market may be overvalued. If you don't sell when the market crashes, you may lose 20, 30, or 40% of your investment. The price of stocks changes every day for a variety of reasons. These situations can trigger an emotional reaction and push you to exit the market at a loss, which often happens among professionals. In real estate, things are a bit different. The land is always valuable, especially if it is in the city. Even in times of crisis, you can often find that they regain their value relatively quickly, since a roof over their head is a necessity for everyone. A significant part of our needs is covered by real estate. It is wise to buy a property knowing that you will not wake up the next day to find that its value has fallen in half. One other advantage of a real estate is that it provides passive income. Rent prices are rising so fast that you don't even need to work. A rental property is one of the few investments that can offer you a high, stable income for a 7 to 8 or even 10% dividend yield. Companies that pay dividends yielding 5% or more are extremely rare. Some companies pay dividends, but they are risky stocks that could cause you to lose much more than you make from dividends if the price drops. The opposite can also be true. The property does not appreciate as much as stocks. As of 2019, home prices increased by 3.8% on average, while the S&P 500 grew by 28%, almost 10 times more. As of the end of the decade, Amazon had a total rate of return of 1,209%, while Netflix had 3 times that number at 3,767%. Companies constantly innovate to stay ahead of their competition in the stock market, so you won't find that kind of return in real estate. Trying to make money in business is not easy. One day you're at the top and a competitor takes you out the next. It's not like real estate that sits in the corner and keeps bringing you passive income month after month. In terms of taxes, there are 2 ways to go. If the stock price rises 1,000%, you are only becoming wealthier on paper. You need to sell that stock when you want to materialize that wealth. You must pay a capital gain tax, which is 20% for long-term investments and can reach 37% for short-term investments. There are several ways to avoid taxes and use cash to improve your wealth regarding real estate. As an alternative to paying for the entirety property up front, you can deduct the interest portion of your mortgage from your tax return. Depreciation can be used to recover the cost of income-producing rental property. Investment properties often result in a net loss because of depreciation, even when they produce positive cash flow. In the case of ordinary income, such losses and expenses, utilities, and insurance are deducted. Even if you sell the house, you can avoid paying capital gains tax if you buy another home. The benefits of real estate taxes are pretty attractive. Of course, there are some downsides. Contrary to stocks, where you can read the company's financial statements, research the company, and decide if it is worth investing in, real estate requires a lot more effort and research. Finding a suitable rental property might take you weeks or even months. You will also face new new challenges once you start renting it out. For example, finding reliable tenants who would care for the house and pay the rent on time. There's always something broken in our house and it needs to be repaired or replaced. All this will cause is additional expenses and costs. You might also have difficulty moving to another city or country since your property might require you to be on site all the time. On the other hand, stock market investing doesn't come with the same headaches. You can be anywhere you like. The performance of your portfolio and the latest news is easily accessible from your smartphone. Endless opportunities await you in the stock market. The stock market can teach you more about the business world than a 4-year bachelor's degree ever could. Whenever you analyze a company before you invest your money in it, you have to read its financial statements, analyze its cash flow, understand its past to better clarify its future decisions, and get to know its products and sales. Also, you need to deeply understand how the economic machine functions, the role banks play in the economic cycles, etc. When you start a business, that knowledge will serve as the foundation for your success. But the stock market is more than just buying and selling stocks. Due to the complexity of the financial system, there are more ways than most people realize to make money on the stock market. These include shorting, in which you sell a stock at a high price and repurchase it at a low price. The stock market opens up many opportunities for you if you master it. You can't keep your savings in an index fund if you don't have the time to do all of that, and be confident that you will receive a 10% return over the long run. Using leverage. Buying stocks is nothing more than a digital document on your smartphone screen. You have almost no control over it, given that your single stock doesn't have much impact when there are 5 billion shares in the company. In contrast, real estate gives you complete control over your investment. You can touch, feel, and control it. Besides the passive income it can provide, as we discussed earlier, it can also provide leverage. Let's say you have $25,000. Investing $25,000 in securities would be worth $25,000. Using the same investment, a mortgage and tax-deductible interest could be obtained for $125,000 in real estate. So, where should you put your money? The answer is, depends on your situation. Real estate is suitable for passive income, but the stock market is better for higher returns, especially if you are a beginner with little to invest. However, you should also consider what interests you. Analyzing companies and sifting through endless paperwork may not be your cup of tea. Several factors, such as where you live, also come into play. Things might be different in your city or even your country. So you should make your own decision based on your own circumstances. And that's all the time that we have today. We hope you enjoyed this video, and if you did, please do remember to hit that like button. If you're new around here, subscribe to our channel, and on your way out, please do remember to click on that bell icon too so you can remain updated about all of our future videos. You're welcome to the channel where you will learn the basics of personal finance in easy to understand language. We'll see you next time.